Income Tax 2020. Tax software example, dependents. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need access to the Lacerte tax software to move forward. We're just going to be going back and forth from the data input to the tax forms, the tax software, allowing us to quickly see the impact on the tax return to the changes. The changes we will be focusing in on will be related to the dependents down below. So we're starting off with our single filing status. We have our taxpayer Eric Smith, and we have no dependents at this point in time. Only income is going to be the $100,000 that we're going to say is in the W-2 wages. Only deduction that we're going to have is the standard deduction. That's going to be the $12,400, giving us the $87,600 taxable income, bottom of page 1. Also the same on our tax worksheet. We have the $100,000, $12,400 standard deduction, $87,600 is our starting point. The tax then on page 2 calculated at the $15,110. Now remember, when we're thinking about what will be impacted, we're basically thinking that it could impact the head of household status from single to head of household if we change or if we add a dependent. So that means it could have an impact here on the standard deduction and the tax rates if that were the case. And then we could also have an impact on the credits, whether that be the child tax credit or the other credit, other dependents credits as well. And that could have an impact on refundable credits down here, including child tax credit and the earned income tax credit. So if we're starting off at the single, then we then go to the head of household. Let's assume then that the dependent then is going to push our taxpayer up from single to head of household filing status. And let's see what the impact will be. And we're going to be going back on over and say, okay, so now we've got a dependent. The dependent's going to be that Tom Smith again. We're going to say date of birth. Let's say 06/15/19, Social Security 444444444. And Tom's going to be a son on the relationship test. We're going to say lived with the taxpayer the entire time period and apply the earned income tax credit when applicable and the child tax credit when applicable. Now, because that's the case, then we would typically need to go back on over and say, well, now I need to change the status possibly from single to head of household. Now, if you didn't do that and you went to like software and looked at the diagnostics, it would probably say, you know, if there's a child or some dependent that looks like it's going to pick someone up from a status of single to head of household, it'll probably give you kind of a default message to check that, to double check that before filing. That's where software can kind of help you out with the process. Let's go back on up, and we're going to say now we have the forms. We're now at the head of household, HOH, and we have Eric Smith, and now we have our dependent down here. So we have Tom down here as the dependent. We have checked off that the child tax credit is checked off here, so they should be qualifying for the child tax credit. And scrolling down, that changed our amount for the standard deduction, moving from the $12,400 up to the $18,650. So that would change if we did that in our worksheet over here. We'd say, okay, that made this now change to the head of household, which is $18,650. Bottom line on the taxable income, $81,350, and that's going to be here $81,350. If we then go to page 2, we now have the tax calculated at the $12,251 on the tax calculation. We can also see that we have an impact in the credit. So now we have the child tax credit of the $2,000. You can see the worksheet here to calculating the credit, but we have the $2,000 child tax credit. We'll talk more about the child tax credit later, but we kind of have to get into it to some degree here, given the fact that the dependent could have one of the primary functions or components or benefits of the dependent here oftentimes will be the credits related to the child tax credit or other. So in our worksheet, then we'd have the $12,251 here. So $12,251. And then we've got the credits. We're subtracting out the credits. So I'm going to put that into another tab over here. I'm just going to say I got a tab here saying this is going to be the child tax credit. Total credits, then bringing over to the front page of that 2,000. And so that brings us to the 10,251 total tax, 10,251 on the total tax. So if I go back on over We got 10,251 there. Now, again, it could have an impact if there's an earned income credit, but of course, we're over the threshold for that at the 100,000 here. So now let's keep the one dependent, and let's say we change it to married filing joint. So let's move from head of household status. So we went from single to head of household. Let's move on over to the married filing joint. So I'm going to go back to the detail. Let's go to the clients and say, okay, we're going to add a spouse here and say now we're married filing joint. And so we have Eric and Jane, and let's go back on over and say, all right, let's take a look at what that one dependent does now. Now, it wouldn't be changing us, of course, from married filing joint to any other status at this point. So now we're not going to have that same kind of impact that would be on the standard deduction. In other words, if we're married, the increase or the adding of a dependent is not going to be impacting basically the standard deduction. So if I go down here, we got the same 100,000. We've got Tom here still on the dependent, and now the standard deduction is at the 24,800. That change not due to the dependent, but the change of the filing status. So if I go back on over, I'm going to say, all right, now this is going to be equal to the 24,800. So there we have that. Bottom line of page 1 is the 75,200. So we're going to say, all right, bottom line 75,200 looks good. Page 2 then, we're at the 8,632, 8632, I'll put here. So that's going to be 8632. And then we have that 2,000 once again for the child, 2,000 bringing us down to the 6632. So then we have the 6632 here. So there's that. Now let's say, okay, well, what if the dependent here was a qualifying relative and not a qualifying child? So let's go back on over and say, all right, dependent here. Let's say they're over 17 now, over 17. So I'm going to change the date here to 6/15/2002. So now they're over 17. If I go back to the forms, then what happens? If I go back up top, we have Tom still here. But now they're not here on the child tax credit, but they're over here for the credit for other dependents now, which is going to be the primary benefit. So if I go back down and say, okay, well, still on there as a dependent, first page is still the same. They're still married, so we still have the standard deduction. Going then to page 2, so now we only have the 500 on this credit. So if I go back to the credit, I'm going to say, all right, now we have a credit, but it's only for the 500 because this is other dependent. So I'll change that on my Excel worksheet on the credits. I'm going to say 500 instead of the 2,000, and that's pulling over to the first page, the 500 other credits there to bring us to the 8,132. So that's going to be the 8,132. We're now at the 500. You have the worksheet here that'll help out to basically work out that calculation. Okay, so let's go back on over and say, what if I go to the detail then, and we say, now we're talking about not a son, but let's say we're talking about a father now, and the father born, let's say 1950 here. So now we're talking about dependent father. So on the type, we're going to say dependent other than child, earned income credit when applicable, child tax credit when applicable. It's probably not going to be applicable here, of course, because we don't have a child, so it should pick that up. Dependent claimed by taxpayer, we're going to say, all right, then we'll go on back over and say, okay, so now we have Tom here. Now at the father, once again, not the child tax credit. We have the credit for other dependents. Scrolling down, we're at the same 75,200 on the first page, going then to the second page. Then once again, we have the 500 for the credit here for the other dependent. So let's go back on up top and let's say, well, what if we have two dependents here? We can add another dependent. So go back on over and say, let's add another one. Let's bring this back to a child, and let's just see if we had multiple children, what happens to the child tax credits here. So if I bring this on back up and say this is 2020, and this is going to be a son. So we'll say son. Let's see if I could just type it in there. I can't find the son. And then we're going to add another one. We're going to add another one and say, now we're going to say Sue Smith. So, and that's going to be on 1/15/18 on the date of birth. Daughter, we're going to say same, lived with the taxpayer. We'll add another. So now we'll say John Smith, 9/20/2017, 2222. This is going to be a son. And let's do one more. Let's do one more. Now we've got Pam Smith, going to be 4/23/16, 1111, daughter. Okay, let's see what this is. We got four items here, 4 dependents. We're going to go back on over and say now, let's see what we have. So we have married filing, joint doesn't change the filing status up top because married is married. And even if they were not married, then it shouldn't be changing. You know, the multiple children wouldn't have any impact after the first one. The first one might change filing status for a single to head of household, but a second child would not. And then we're going to go back down and I'm going to go back into the data and I'm going to say the type for Tom. Let's bring Tom back up to a child living with a taxpayer. And then, so that looks good. And I think I had something wrong with John here. I had the date of death instead of the birth. So he died, but he was never born. So let's put him back on. So there we got, now we got 4 that are basically the qualifying children. So they're showing here, of course. So they're showing here the child tax credit applicable. Same items for page 1, the 100,000, the 20. There's no change to the standard deduction here because it's not having an impact because there's no change to the filing status. 75,200. If we go then to page 2, then we have that 8,632, and then we have the child tax credit now at the 8,000, which is of course the 2,000 times 4 at the 8,000 at this point. So now let's make another adjustment. If I go back on over and say, okay, well that brings the income down to pretty low here. What if they didn't earn that much money? What if they, can it take the tax liability down below 0? And so we could check that out and say, well, what if they earned? If I go to my income and say, let's bring the income on down to 70,000 instead of 100,000, still married, and we're going to say go back up top, and then we're going to say, okay, so now on page 1, we've got the 70,000 minus the 24,800, which is the standard deduction, and that's going to give us the 45,200. If I bring that back on over to page 2, then now we've got the tax calculated at the 5,032, but we can't put that full credit up top here because it would be greater than the tax. It would have been 8,000 as we saw before, so it's kind of capped. If you see it here, the 8,000 is basically capped at that 5,032, so that's capped out. But then if you go down here, you'll notice we have this, the additional child tax credit. So again, we'll talk about that more later, but that could be a situation when you're thinking about dependents. You could be thinking, well, what if the what if the credit is greater than the tax that is owed? Well, there could be a case where there's a refundable credit here, and so that might be something that would be applicable too. You also could have an impact on the earned income credit with the child could affect that as well. So if we so just keep those credits in mind. We'll go into more depth on the credits in future presentations when we specifically focus in on the credits. So once again, recapping here, you could have an impact if we make the change for a dependent to the status, typically if there's a change from single to head of household, and then we could have a change here on the credits, which would be the child tax credit hopefully first, and then next, if you don't qualify for that, the $500 for other dependents, and then there could be an impact on the child tax credit portion that's refundable past the liability point, and possibly an impact on the earned income credit for the dependents as well.